We have many having been surprised that while data out of the US came in pretty solidly, the markets have taken a dip. Do you agree that the hurdle of beating market expectations is now being set much higher?
Yes, I think companies need to have an outlook going forward where they say they can make earnings. The earnings have to come from not from cost cutting. So people are looking for how they're going to get earnings going forward, and they want to see that looking forward. And as companies say, it's going to be difficult into the 6 months, so that hurdle starts to get higher and higher.
Of course, implication is dire for riskier assets such as ours locally. What have you been making of the local market's performance today?
Obviously, there's still profit taking coming into the market. The market is still up considerably from a month or two ago, and we're not seeing a lot of flow coming in and more profit taking, although we're not seeing excessive selling at the same time. So mainly profit taking and not short selling just yet.
There's lots to contend with on the local front today. On the economic data side of things, PPI figures coming in. The market was expecting negative 4.7. We've come in there at negative 3.8% year on year. What is the market made of those numbers?
Obviously, we were expecting PPI to be about 4.5% down, and it's only 3.8. But it still is going downwards, and that is positive. And as long as that PPI carries on that trend, the market will be quite happy. But we need that to come down so we can get another interest rate cut by year end.
In most instances, the base case is for 7% to be the trough in this easing cycle. Do you see this week's inflation numbers, so CPI and PPI together, posing any downward risk at this stage to that repo rate view in your books?
The numbers came out more or less as expected, so I think we'll still get a 50 basis point cut by the year end.
Okay, well, of course, along with that economic data, we've had a slew of company results coming to the fore as well. Let's start off with Woolies. What did you make of those numbers?
They weren't the greatest numbers. On their clothing side, the numbers looked quite good. Their clothing brand from Australia doing very well. But on the food side, they really are battling. And if you take a look on the food side compared to someone like Shoprite, they're losing clients to Shoprite, and not the best set of numbers for Woolworths. They also adjusted some of their numbers with some tax and creative accounting, so not the best set of numbers, and I think it reflects that in the share price currently.
You've compared it to Shoprite. Let's bring Massmart into this equation here, where some traders have been saying that they were a bit disappointed with the numbers, that should have seen more relief from customers shopping down, more cost-conscious consumers coming to the fore. What did you make of the numbers out of Massmart?
I think they were 4.6% down, and not a great set of numbers again. Another retailer with not good numbers, and also saying going forward they're going to find a difficult 6 months going forward. So not a good set of numbers there. People not trading down enough, obviously macro and game, a lot of appliances in those type of businesses, and not a lot of clothes and cheap clothing, and not that much food. So not the best mix of retail products.
Okay, well, let's look at some of the others here. There's so many to go through. MTN, the market seeing a poor number there. And of course, it's this entire deal between MTN and Bharti that is standing squarely in the spotlight. To what extent do today's numbers reflect that Bharti is in fact the dominant player here, and provide them with an incentive now not to pay a premium if this deal goes to the fore?
I think so. They weren't the best set of numbers for MTN coming into with these talks with Bharti, and I think if this deal goes through, working on some of our numbers, it looks like Bharti will have a majority rather than MTN, and they're going to have a little bit more pressure from the Bharti side not to pay a premium now, and I think that the MTN shareholders are going to be under pressure for the next month.
If we look at these numbers, I mean, we've been through Woolies, Massmart, MTN. We've, of course, had Murray and Roberts and Implats as well. Have any of these companies really outperformed market expectations in your books?
Well, I think there was 5 companies out today, and 5 of them said that trading conditions are difficult going forward, and none of them exceeded expectations. Murray and Roberts was the closest in line with expectations, and their forward-looking view over the next 6 months was the most positive, but the rest of the companies looking for a very difficult 6 months, and it just shows you how much pressure the local market is under. And most of these stocks are fully priced where they're trading currently, and should probably be slightly overpriced as well, and we're looking probably for a short sell-off for the year ahead. I think most of our numbers on those shares, we've got sell recommendations from our analysts.
And let's very quickly look at Implats, because of course while numbers were out, they've got an ongoing problem as well in terms of strikes at their mines, and today reports saying that that strike at one mine could possibly extend throughout the company. Is that a major pressure point in your books moving forward?
No, I think so. Production was already down 11% and costs were up on from employees about 15%, sorry, from employees. If that strike carries on, the costs are going to go up on, the production is going to carry on going down and costs increasing, and it is very problematic for Implats at this stage. And if there's a very slow recovery and not a quick recovery in the car sector in the US, that's going to hamper Implats quite a lot. They are cash flush currently with 1.3 billion sitting in their, on their book in cash. However, a prolonged strike will be detrimental to their business.